Hello, welcome to AVPN's webinar on financial inclusion for Southeast Asia's underserved. The webinar will start in 4 minutes. Before we kick off our session, I'd like to highlight a few features of this room. Please note that this session will be recorded and the recording will be available on request after the session. We will also have time for Q&A towards the end of the session. Please do type up your questions in the Q&A box and we're going to convey these to our speakers. I would also like to direct your attention to the disclaimer on the screen. Good morning, everyone, and a good evening to those of you joining us from a different time zone. Welcome to AVPN's webinar on financial inclusion for Southeast Asia's underserved. This webinar is hosted in partnership with Patamar Capital. I'm Komal Sahu, Chief of Sustainable Finance at AVPN, your moderator for this session, and I'm delighted to have you join us today. And to get to know the audience better, we have a poll you can fill out as I introduce the session. In this webinar, we will hear the investor perspective from Patamar Capital, Bosale and Shuyin Tang, as well as prominent social entrepreneurs working to connect the last mile with financial services. They include Tracy Phan from Kim An, a leader in SME lending in Vietnam, linking MSME businesses to credit, and Aldi Hario Pratamo, an Indonesian technology entrepreneur with a prolific career developing Indonesia's financial inclusion ecosystem at Mapan, formerly PT Rumah, and then subsequently at Gopay. In addition, Noshin Nova from the Global Impact Investing Network, GIN, will also be sharing her learnings from the recently released report, Understanding Impact Performance, Financial Inclusion Investments, and will provide us with a foundation to understand how impact is captured in financial inclusion using the IRIS Plus system. A few housekeeping announcements before we move to the full program. If you have any questions for your speakers in relation to the session, we will be holding a 25-minute Q&A at the end, so please stay with us. Feel free to type up your questions in the Q&A pod, and we will convey these questions to our speakers. Due to time constraints, we're not going to be able to respond to all of your questions. Finally, please note that this session will be recorded and you will be able to access the recording after the session on our YouTube channel. Before I pass the mic to our speakers, let's see the results of the poll. So it looks like we have a lot of diverse group of organizations joining us today. Quite a few of you are from the venture capital and impact fund businesses. And you seem like you're ambivalent as to whether it's funds or direct deals. And a lot of you are focused on all of Asia, not just Indonesia and Vietnam. So that's really good to hear. With that, now I'm going to begin with Noshin, who will tell us more about her experience in GIN and perspectives on measuring impact performance. So over to you, Noshin.
Great, thank you, Komal, and thank you so much to everyone who's joined us today. It's really great to be here. Again, I'm Noshin Nova, and I'm part of the GIN's research team. I am super excited to share with you today some key findings and learnings from the GIN's recently published study on the impact of nearly 800 annualized impact investments made in the financial inclusion sector. But even more importantly, we'll talk about why this work matters and why it's particularly important right now for the impact investing industry. Of course, before I begin, I want to quickly give a shout out to AVPN for hosting this session today. We at the GIN have been so grateful and so lucky to have a strong partnership with AVPN over the years. And this is just another example of where we're able to come together for the benefit of the broader industry. I'll also share a little bit about the GIN for those in the audience who might not know us. We are the global champion of impact investing with a broad network of 30,000 individuals across 6 continents and a formal network membership of over 350 investors across 50 countries. We also have our wonderful global advisors on the ground across 5 regions in the world, 2 of whom are on the line today. Our regional advisor for Southeast Asia, Maud Savory-Mornay, and our advisor for Australia and New Zealand, Zarmeen Pavri. And at the GIN, we believe that as the impact investing industry grows and scales, it's more important now than ever to measure and report on impact performance. And of course, I'll touch upon a lot more of that in just a bit. For today's agenda, I'll walk us through study motivations, key results, a quick demo of some resulting analytics, and more about the GIN's ongoing impact performance work. And I hope that by the time I'm done with all my talking, you see the fruition of your work in the data and that you will be involved with us at the GIN as we continue on this journey. Without further ado, let's dive into the research. So this research has been largely motivated by the GIN's mission. At the GIN, we strive to create a world where social and environmental factors are integrated into all investment decisions. But investors cannot account for social and environmental factors without being able to measure the impact of their investments. And in order to prevent impact washing, we need transparent impact results. So if we go to the next slide, over the last few years, what we've seen here at the GIN is that impact investors' demand for impact data and insights are growing rapidly. And in light of these market trends, impact investors have also noted some gaps in industry infrastructure, particularly when it comes to reliable, high quality tools to analyze and compare impact performance results. As you can see here on the slide, 84% of impact investors note that a key challenge in the industry is the inability to compare their impact results to market performance. And 92% believe that impact benchmarks can help address that challenge and further advance impact measurement and management. So to further scale the industry and give investors the opportunity to differentiate themselves through their impact, the GIN is seeking to lay the foundational analytics and build prototypes of the industry's first impact benchmarks, which we hope in turn will pave the way for ratings and indices. Which brings us to the GIN's work on impact performance analytics. And for the purpose of today's session, our efforts to understand the impact of performance of financial inclusion investments. Given our limited time together, I won't be covering all of the data and insights in this presentation, but instead I'll focus on giving you a sense of what is available in this report. And I also want to provide a little bit of context around study parameters and the groundwork behind this report, just so you can further contextualize the findings that come later. For this study, we only collected data for investments that were made directly into companies rather than investments made through funds or other intermediaries. This is primarily to avoid any double counting within our data set and in the results. And of course, all investments were made in the financial inclusion sector, that is, investments made to enable credit, savings, insurance, or payment services with the intent to create measurable impact. We also asked respondents to the study to only submit annualized impact performance data, that is, performance within a 12-month period, so as to enable comparability between different investments. Also, when developing the questionnaire and study scope, we leveraged the standardized and evidence-backed metrics of IRIS Plus, the generally accepted system for measuring and managing impact, as well as a number of other resources specific to this sector, such as Series SPI4, the SPTF dimensions, and metrics by MIX and the microinsurance network. We also aligned the study to the 5 dimensions of the impact management project and the UN SDGs. And I say all of this because part of why we focus so much on alignment is to cut down on the noise and ensure harmonization to enable the deepest possible insights into impact. I also see today some of our study participants and advisors for this study, and just want to take another chance to thank you so much for your contributions, because it really wouldn't have been possible without your input and guidance. Okay, so now we'll actually look at some results. If we go to the next slide. So the financial inclusion sector is associated with a pretty long track record in impact investing and was also the second fastest growing sector in the industry over the last 4 years, as per the GIN's 2020 annual survey. Yet more than 1 billion adults around the world lack access to basic financial services. So we're pretty far from providing responsible and affordable financial services to every adult in the world. But this is where impact investing can and is playing a role. If we go to the next slide, for this study, we collected annualized impact performance data from 46 impact investors that have collectively made nearly 500 unique investments in this sector. Some investments provided impact performance data for multiple years, resulting in nearly 800 observations. Most were for-profit asset managers, aligned to the fact that this study only focused on directly made investments and investing primarily into MFIs and fintech companies. And almost 20% of investors were headquartered in Asia. Stakeholder engagement was another key theme among investors in the sample. Nearly 40% work directly with their investee to reflect the perspectives of end stakeholders in product service offerings. And I know we'll hear much more about that from Patamar in just a little bit. Moving on to the next slide, a snapshot of some key investment features. A huge chunk have been made either through private equity or private debt, and nearly half of all investees are in the seed or venture stage. Over 90% of investments were made into emerging markets, primarily in South Asia, 27% in India, and another 10% across Southeast Asian countries, particularly Cambodia and Myanmar. And the majority of investments met their financial targets, which were almost fully market rate across the sample. And you'll find additional analysis on the performance in the full report. And here's a quick breakdown of the types of financial products that investees are providing. As you can see, pretty skewed towards credit, but these other products and services are often offered bundled with credit. And as some of you may know, this is becoming an increasingly common trend in the sector as questions around long-term impact outcomes and improved resilience become more and more important. So moving on to the next slide, the purpose of impact investments is to create sustainable impact towards longer term outcomes. But of course, most investors are currently not measuring long-term outcomes due to a variety of resource constraints. But what we found is that by capturing insights on certain clusters of outputs, the evidence base can then extend to reaching reasonable indicators of outcomes. So for example, while tracking just the number of loans disbursed won't tell you much about the increase in the end stakeholders' spending on healthcare, looking at whether those loans were provided for healthcare financing or alongside health insurance products and provided with client protection policies and a responsible interest rate likely means that the loans provided could indeed result in increased spending on healthcare. So we've taken this approach to pull together a variety of the output metrics that investors are collecting, more specifically IRIS Plus metrics that are standardized and evidence-backed, to connect these outputs to shorter-term, more immediate outcomes. I'll acknowledge that we don't necessarily have the data or the tools to map to longer-term outcomes yet, which might be better suited for evaluations or randomized control trials. All that said, we present to you the 4 pathways that are featured in the financial inclusion study. So given the IRIS Plus metrics we had in hand and the IRIS Plus evidence maps in the financial inclusion theme, we identified 4 key areas of longer term impact in this sector. First, enabling decreased reliance on solely informal network through providing first-time access to finance in populations that previously only had access to informal alternatives, be it friends, family, or community groups, or predatory informal alternatives like loan sharks, or no access at all. And we then compare the number of individuals provided that first-time access to formal financial services to the total population of unbanked adults in that country or countries of investment. Second, increase spending on basic services such as education and healthcare. In this pathway, we dig deeper into the type of loan being provided, like education financing or home improvement financing. And we consider loan quality indicators to assess that these are responsibly provided loans. And then we compare the number of individuals provided those loans to the population of individuals excluded from formal credit in the country of investment. Third, we have this pathway, accelerated business expansion, also focused on loans, but only on business financing and working capital loans provided to MSMEs, which vary, of course, from loans to individuals. This is then weighted 2 ways. First, relative to the total number of credit-constrained MSMEs in the countries of investment, and second, to those countries' estimated MSME financing gap. And lastly, we wrap it all up with improved financial resilience, where we dive deeper into bundled products, like savings and insurance provided along with credit. And those are usually geared towards improving clients' ability to manage financial shocks. And we focus only on active clients in this pathway to drive home the point that simply having a bank account with a financial services provider may not strengthen long-term resilience, but actively using that account is what can contribute to improved financial health, especially during times of shock. So that was a lot of information. Thank you for bearing with me. I'll note that the full report includes additional quantitative analysis and a spotlight box for each of these 4 pathways to highlight real examples of how investors and financial service providers are working together towards each of these outcomes. I think if we have one more click, we'll see some images. Yes, we have those for each spotlight here. Each pathway here, sorry. And while I don't have the time today to dig into particular analytics, I do want to share with you some of the key insights that emerged from this analysis. So to summarize, as you see through these outcomes, a number of themes apply across the sector. These are the four key outcomes through which the sector reflects progress. Second, investments reflect a commitment to enable moving beyond access and towards usage. Notably, 82% of the nearly 800 annualized investments in this sample track the number of active clients, which is really, really great to see. Next, nearly universally, investees have provided client protection policies and or analyze their borrowers' repayment capacity and or align to industry standards and certifications. And lastly, there's a lot of opportunity for further impact investment, particularly in reaching previously underserved populations and through gender lens investing. Nearly half of the investments in this sample seek to target women and reduce gender inequality through financial inclusion. Of course, these represent just a starting point of our understanding of impact in this space, and it's a growing data set, so it offers one view into the performance of these investments, but we're hoping to continue to grow the data set and deepen the insights. On that note, I wanted to quickly share a demo of some of the impact performance analytics that we're working on. For now, our hope is to create an interactive dashboard for investors to play around with the data themselves and see what impact looks like for their peer groups. But ultimately, we hope that dashboards like this lay the foundation for future impact benchmarks for financial inclusion investments. So, impact in financial inclusion is multidimensional. It involves a range of impact metrics, target stakeholders, and products and services. And that's what we hope to capture in this dashboard. So here's a key IRIS Plus metric of the first impact pathway we discussed, decreased reliance on solely informal networks, where we look at the number of clients provided first-time access to formal financial services. Each circle here represents the impact associated with a single investment during a 12-month period. The tiny box you see underneath lists the average or the impact achieved by the typical investment over a year, but we also see the dispersion here and the volatility. Pretty wide range, which is to be expected given such a diverse sample. We also have this reflected for the other three pathways, where each box represents a key IRIS Plus metric within that pathway. And on the right side, we add some color to the impact, beyond the how much metrics and into the who and the how to further contextualize this performance. And putting these all together, you'll see some filters on the top right that can help investors understand how their impact compares to their peers, how investments accrue impact over time, and potentially use that to shape investors' timing around exit, as well as their objectives. Investors can also see how they vary by the type of target returns, the investee stage of business, and the type of investee. And all of these can provide valuable insight during investment decision making. For example, if we only look at investments seeking market rate returns, this is a great way to better understand the performance of a particular market segment. If we go to the next slide, I think. Perfect. So as you can see, this dashboard is dynamic and it will change based on the peer group you select. Again, this is meant to provide a snapshot of the kind of insights that impact data can enable. And I encourage you to check out this and other dashboards we have, also for the clean energy and agriculture sectors in the GIN and IRIS Plus websites. And then if we move on to the next slide, again, we've heard from investors that impact performance info can be used across the investment process to inform a range of decisions across, such as the ones pictured here. And our hope is that as we continue to build out these data sets and refine the analytics so that it becomes easier for you to incorporate impact data throughout the investment process. So I'd love to, start a quick poll here to understand from this room, which of the following: strategy, selection, management, exit, and reporting can impact data help investors inform? And we'll give you about 20 seconds here. Okay, let's see. Do we have some results coming in? Oh, wow. Okay. Okay, this is so interesting. I think my first reaction is that I I don't know if everyone can see this, but it's great to see that folks have selected literally every single option among all of this, which just reinforces that impact data can inform decision making across the investment process. In this case, I see that 3 out of 4 people in this room have selected investment selection, followed by strategy setting, reporting, investment management, and exit. Okay, this is so insightful and exciting to see. So thank you all for sharing your perspective. Um, in the interest of time, I'll just quickly share some of the ongoing work that we're doing at the GIN around impact performance before I pass it back to Komal. I think if we go to the next slide. Perfect. So our Iris Plus team is working on launching the Iris Plus themes and core metric sets for 2 new themes: quality jobs and climate change mitigation, for which we hope to start collecting impact data in May. So please let us know if you are interested in contributing your impact data, or being a thought partner as we develop these. We're also actively collecting data for the sectors in which we've already published work: clean energy, agriculture, and of course, financial services. And you can reach out to this email on the screen, impactperformance@thegin.org, if you want to participate or discuss further. And of course, feel free to reach out with any thoughts or questions regarding what I shared today. I'll look forward to receiving any questions in the chat. But again, thank you all for staying with me through this, and I hope to stay in touch. Over to you, Kumar.
Thank you, Noshin. That's really useful learning for our audience. I would like to now introduce our next speaker, partner and co-founder at Patamar Capital, Bo Sale. Over to you, Bo.
Hi, thanks. Yeah, it's great to be with everybody today, and thanks to Noshin for an insightful presentation on the current best practices related to impact measurement and sharing insights how the impact investing industry has actually evolved. We joined the GIN as a founding member nearly a decade ago, and it's amazing to see how the network has grown and how it's helped drive the industry forward. So one thing I wanted to start off by doing, if you could move to the next slide, is really just share with everyone that for the last 15 years, I've been working with a great group of partners, and I've been actively investing in impact-driven companies in South and Southeast Asia to essentially reimagine markets, create inclusive economic growth, and improve the lives of low and middle income communities across the region. We've established a pattern of entering new geographies and investing into new business models ahead of mainstream investors, with the goal of generating real impact by backing impact-driven entrepreneurs who are working to build sector-defining companies at scale. Next slide. So as a brief history, we began this journey back in around 2004 when my business partner, Jeff, a longtime VC investor in Silicon Valley and Europe, stepped away from his traditional VC funds and raised the first commercially funded impact VC fund focused on microfinance institutions. Today, as we've witnessed the growth of the microfinance industry across the world, many of you may have think that this would have been like a no-brainer at the time. But it was incredibly innovative, quite risky in the minds of most investors, and everybody thought that the team was really just dressing up philanthropy using a different name. Needless to say, Jeff and the United Equity team, which really became kind of the predecessor of Patamar, had a demonstration effect on mainstream investors when the entrepreneurs who they backed proved that microfinance was a viable business model and one that could provide critical financial services to low-income people at scale and deliver strong financial returns. We saw groups such as Sequoia Capital and other VC and growth stage investors join us as co-investors on the path to IPO. So capital markets recognize that financial services companies could be built to extend services to low-income people, and then countless debt and equity funds were actually launched to back microfinance institutions around the world. So moving beyond that, really financial inclusion was a core pillar of what we did from the very beginning. And then in 2010, we embarked on the next step of our journey when we decided to back new business models and impact-driven entrepreneurs located in geographies not yet touched by mainstream venture capital firms. So we ended up leading the charge into what we thought was a new market, entered into Southeast Asia, really focusing on Indonesia, the Philippines, Vietnam. And due to a large number, and the reason why we did this actually was because due to a large number of low-income people in those markets, high population density, large enough macro economies to really drive scale and potential acquisitions. And what we also thought would have a demonstration effect in markets of showing there were other types of business models and other markets that were outside of mainstream venture and impact investing at the time to really take things to a different level. So we were seeing high quality entrepreneurs such as those that we're going to highlight today, returning back home, getting great experience either in their home markets or in the US and Europe, and launching basic tech-driven platforms and financial services companies that were focused on building the next generation of what we call phygital, meaning a blend of the physical world and the digital world to redefine industries that had been, I guess you could say behind the curve in Southeast Asia. And the other thing that was critical to us was thinking about how we could reimagine how these economies worked. So as an evolution from our days in microfinance, one of the first steps that we took was a natural step in supporting the growth of SME finance companies to drive deeper financial inclusion, and also began investing in companies that really had novel models like Mapan in Indonesia. Then in 2017, we really wanted to also amplify the impact that we were having. And we decided to make the shift from being what we called at the time accidental gender lens investors to formally integrating a gender lens across our firm and across our investment thesis. So with the backing of the Australian government's Investing in Women program, we were selected to take a leadership role in promoting gender lens investing in the VC community across Southeast Asia, and really have had an amazing journey in that realm as well. So in a nutshell, we've always been looking to maximize the impact of our work and take our pioneering role in entering into new geographic markets and backing impact-driven entrepreneurs before those models became mainstream, and really had a playbook that others could replicate. Next slide. With offices and team members across the region, Patamar is really embedded in the local ecosystems, and we feel that we've had a strong influence in promoting and growing the impact investing ecosystem across the region. I remember when AVPN was getting launched, when we were getting launched, a number of others, and it's just been an incredible ride, and to see even more traditional VC and private equity firms across Southeast Asia start to take an impact lens. And we think there's a lot of opportunity, but also a lot that can be done to really maximize the impact that can be done in the region. Next slide. So to put it simply, what we think about at Patamar is, this is really our DNA. It's rooted in driving impact and creating economic opportunities for low and middle income people. That's why the firm was founded, why our team joined us on this journey. Our investors have supported us through the years, and I know we have a couple of them on the phone today, and why we invest. So we believe that there's a subset of companies that can generate incredible impact, generate top-tier commercial returns, and become sector-defining companies that will have a lasting impact on how Southeast Asia operates and evolves. And we back those entrepreneurs who are focused on doing this work. I'm often asked what makes Patamar different, and it's exactly this. We back founders who have impact at the core of the business models they're trying to build, and also impact at the core of the company cultures that they're trying to build. Let's not just back the business models of the future, but let's actually just back the companies of the future and how they operate. So, in a nutshell, we do not only measure impact, but we are actively involved in working with visionary founders to create that impact. Later today, we're going to talk a bit with Aldi. We'll talk with Tao as well. Both of those entrepreneurs have put impact at the core of everything that they do. And as we learned from Aldi, we'll see how, as he built a company from birth through exit and built it into the Mapan business model, how impact was at the core of that company's culture, and how he took that focus with him when he moved into Gojek and built Gopay from a really small financial services company at the time into one of the most dominant players in the industry. So, one of our theses is, if technology companies are going to redefine sectors and industries, which I think most of us believe, and redefine how Southeast Asia's economies are going to function in the future, it's going to be critical for companies to have impact at their core and as a key lens they use to process the world in order to spot all the opportunities that they have to use their platforms to create and maximize the impact of their platforms. And once sector defining companies are established at scale, it's really hard to displace them. So these companies will create the new benchmarks for how industries function and how stakeholders across the region are treated. So if Gojek goes out and shares a certain margin with their motorcycle drivers, that's probably going to have an impact, vice versa, on how Grab were to do it. If e-commerce companies that are bringing small shopkeepers online are doing sharing margin with the people selling, whatever they set as that standard is really going to be there not only for the short term, but maybe for the long term. And so just because some companies are having some impact, it doesn't mean that they intentionally set out to do so. And it's highly unlikely that those companies that don't have it at their core will be able to spot and maximize the opportunities to launch impactful products and services or economic sharing models with the stakeholders whom they engage. So we at Patamar, we imagine a different Southeast Asia, and we believe that impact-driven founders, management teams, and early-stage investors who end up controlling the cap tables and setting the culture of tech companies for the long term can create and maximize impact to a whole different level, and then attract later-stage investors to back those founders' visions and the business models that they want to build. Next slide. So as we continue to invest across Southeast Asia, our lens is going to remain pretty constant for the current time, and obviously it'll evolve as new opportunities come up. We'll continue to target companies serving the mass market of low and middle income consumers, which are the customers that we know best, and help SMEs or small and medium enterprises access the tools and markets they need to survive and thrive as sectors of the economy quickly digitize and modernize as a part of the tech revolution. It's exciting to see all the platforms currently being built across the region to help small shops, small pharmacies, small farmers, small truck drivers, you name it, get the access to the technology, financial tools, and other business efficiency tools that they need to compete with the age-old power brokers in the region. And this is where over 90% of the economy is actually happening. Next slide. So key to this thesis, we continue to pursue investment opportunities linked to inclusive financial services and those basic tech platforms that serve informal sectors of the economy. This is where livelihoods and incomes can be improved, new economic opportunities can be created from scratch, and more of the economic gains from Southeast Asia's rise can be shared across society to create an upward cycle of growth and geopolitical stability. As we've seen the rise of nationalism, protectionism, and tribalism appear across the world, it's often linked to economic stagnation and increasing income inequality. And you know what? We don't think that Southeast Asia needs to follow that same path, but it's going to take entrepreneurs and investors up and down the capital stack from early stage through growth stage who care about maximizing impact and in generating inclusive economic growth to make this a reality. Next slide. Although I mentioned that impact metrics are not enough earlier, that we really need to focus on really creating and maximizing impact, they are critical and help provide critical data and evidence of the impact of our investments. We track and report on the GINS IRIS impact metrics that are embedded in the DNA of our portfolio companies and are also correlated with the business success of each of those entrepreneurs and founding teams. I repeat, these metrics are correlated with the success of the businesses we invest into. And we work with our portfolio companies to identify the metrics that they believe will not only help them maximize impact, but also maximize their commercial success. Otherwise, these early stage companies with a morphing business model and management teams focused on getting to product market fit and making payroll probably won't have the motivation or the bandwidth to be able to track those metrics. So we just want to make sure that they're embedded in the success of these businesses and they're correlated with the impact, especially as their models change. And we need to make tough decisions as boards and as management teams, where the company goes after that. So we typically choose those metrics that show the breadth of our impact, such as the number of lives improved, and the depth of impact, meaning more like the economic benefit of a portfolio company, and other company-specific metrics that we and the management teams of our portfolio companies believe demonstrate the impact of their model. Next slide. So as Noshin mentioned previously, we're not focused solely on just measuring outputs, but metrics that also provide evidence of the immediate outcomes that are linked to our theory of change as we make a new investment. For example, as a financial inclusion company in our portfolio, Canara Capital is one of the leading SME finance companies in India, tracks its borrowers what we call decreased reliance on informal networks to gain and maintain access to formal financial services for the first time, and how its borrowers benefit from accelerated business expansion in the form of 20+% income boosts, the ability to hire new employees in non-urban areas, and provide first-time jobs for women, which often results in increased spending on education, health, and other essential products and services. Next slide. So we're currently in process of collecting and processing our impact metrics for 2020, but I just wanted to give you a quick snapshot of how we measure and present impact data to our investors. A quick scan of this slide will show that the company really tracks the growth of new jobs at Kenara, new jobs created by their borrowers, the number of first-time jobs and first-time jobs for women, the active number of loans outstanding, and the average income growth for its small business borrowers. Next slide. So just quickly, as a result of our work over the last 10 years, we feel fortunate to have worked with visionary entrepreneurs who've ended up improving the lives of over 5.5 million people and have utilized our investment capital, our strategic advice and experience gained from investing across 6 emerging Asian markets, and access to impact-driven co-investors and partners to 30x their impact to their businesses since we made our initial investments. Next slide. Later today, we're going to be interviewing Aldi about his experience building and running Gopay as a dominant fintech company in Indonesia, but his roots go back way before that, back to his original financial inclusion startup called Mapan that was acquired by Gojek in 2017. Mapan provides over 1.5 million families with essential products such as affordable and durable consumer products at a significant discount, and uses a traditional arisan model, better known to many of you as a traditional rotation-based savings and installment financing model, or RASCAs, that's prevalent in Indonesia and in most emerging markets where formal financial institutions have not yet reached the mass market. In actuality, this is likely the original form of banking. And Aldi and his team had the insights and utilized a tried and true model familiar to Indonesians to help them better gain access to the formal economy and build a bridge to the formal financial system. So essentially, Mapan's aim is wrapped up in the definition of the word that Mapan is. It's economically self-sufficient. Since low-income people typically get the worst products at the highest prices and the worst service, I'll never forget when Aldi told me that his goal was to bring financial services to all Indonesians, and that he was going to use the Arisan model to make it happen and build what he called, quote unquote, the Costco for the working poor at the time. Next slide. So Mapan's success and Aldi's journey is a prime example of how an impact-driven founder can build and successfully exit an impactful company rooted in an impactful product and an impactful business model that shares economic gains and increases the incomes of low-income people, all while being rooted in a company culture of impact. From the beginning, Aldi intentionally raised money from impact-driven co-investors such as us. We led the Series A round a long time ago. Omidyar Network joined us, and we built a really strong partnership with them. And then Aldi, all of us believed in his vision and gave him the space to build Mapan during all the twists and turns. He worked closely with myself and his other investors to attract later stage co-investors such as Golden Gate Ventures and SEA Group, who many of you may know is one of the largest tech companies in Southeast Asia now, who also believed in his vision of serving the mass market. And then he was able to exit the company to Gojek with an aligned vision of improving the lives and extending financial services to all Indonesians. So all I want to say is it's possible. And this is what we try and do when we invest and support our portfolio companies, is really be a part of the impact creation journey and then the impact maximization journey as we sit as board members, as major shareholders in these businesses, and really can help the entrepreneurs have an influence on the direction that the companies go. So next slide. So moving beyond financial inclusion in Indonesia, I'm going to turn it over to my business partner, Xuyen Tang, who's based in Vietnam, to share a bit about Vietnam's leading MSME finance company, Kim An, and also introduce Kim An's CEO, Thao.
Thanks so much, Bo. So our latest investment in Vietnam was our Series A investment into Kim An, which is an end-to-end service provider, which serves as a bridge between micro SMEs on the one hand and Vietnam's leading financial institutions on the other. You can see an overview of Kim An on this slide, but I'd like to take the next few minutes to say a few words about what got us excited about the company before handing over to Tracy, the company's founder and CEO, to share more. So as Bo has already spoken about, financial inclusion has been a core focus of Patamar since our inception, and a sub-vertical we're very familiar with and passionate about is Sme Lending. So as you can imagine, since I started investing in Vietnam around 8 years ago, I've always been on the lookout for an SME lending play. And this is tremendous potential in Vietnam, or in the Vietnamese context, where there are more than 5 million SMEs, and they really serve as the backbone of the economy. Well, unfortunately, I was pretty unsuccessful in my quest for the SME lending company that I was looking for until about 7 years ago, for about 7 years, until I encountered Kim An last year. And why is that, right? So obviously the market is huge. So why aren't there more companies or entrepreneurs tackling it? One key reason is that the Vietnamese financial services sector is one of the most tightly controlled and regulated in the world, with only a few dozen banks and non-bank financial companies in total. And this is in contrast to India, for example, where there are over 10,000 licensed NBFCs, or in Indonesia, where there are several hundred multi-finance companies. And you may be wondering about, say P2P, alternative lending. Well, there's actually no formal framework yet for P2P lenders to operate in Vietnam. So this means that if you want to get involved in lending at scale in Vietnam, you really have to partner with a bank or an NBFC. And I think this context is so important, as otherwise you might think, oh, Kim An is just another SME lending platform. What's so special about it? But they're really doing something which we haven't seen any other organization do at scale. And they've cracked how to bridge the gap between banks and financial institutions on one hand and SMEs, and in fact, micro SMEs on the other. The person who really made this possible is Tracy and her team. And after working at McKinsey, she founded Kim An in 2013. So she has devoted most of her career to understanding the needs of micro SMEs and is one of the foremost experts about this segment in Vietnam. And we've been incredibly impressed by her deep knowledge of her customer segment and her relentless execution as she scaled the business. And certainly 2020 was not an easy year for most lending organizations, but Kim An managed to grow while managing risk, and that's a testament to Tracy and her team. We're very proud to be working with you, and I'd like to hand it over to you to share more about your business.
Hello, everyone. Thank you, Bill and Trinh, for a wonderful introductions. So today, I think we will look into the market opportunities, in details, the market opportunity in Vietnam for financial inclusions. I will share with you the operating model of Kim An, how Kim An is connecting between the financial sectors to the entrepreneurs and the micro business owner of Vietnam. I will share with you the insights of the customer that we are serving in Vietnam, how they think, who they are, what do they use the loans for, and then also a little bit about Kim An's plan going forwards as to how we plan to create the impact at scale in Vietnam. So let's get started. Okay. So as many of you have known, Vietnam has been one of the fastest growing economies in Southeast Asia, especially in 2020 during the COVID time. The government in Vietnam has handled the situation with high efficiency, thus Vietnam remained one of the handful economies that had positive economic growth last year. So this is a country with a population of 100 million people with very strong entrepreneurial mindset. What it means is that if you ask a young person in Vietnam in terms of career aspiration, what do they want to do? Like majority of them would respond that they want to own their own business at some point of time, right? So with this culture and mindset, there are 5.6 million household business and 1 million companies in Vietnam. The household business is a very unique business entity in Vietnam. So this is a legitimate business entity, and the business would pay monthly tax to the government with very good tax benefits, such as that there is no back audit of the tax. So when entrepreneur go to start a business, most likely they would start as a household business. And then on top of that, we have 1 million companies in Vietnam. So together in this group, the micro, small, and medium enterprise would account for 98% of the number of enterprise, more than 50% of the job created, and more than 40% of the country's total GDP. So this is the backbone of the Vietnam economics, and it is a 3.5 billion US dollars market opportunity in lending in Vietnam. And as Shu Yin have shared, this segment is very underserved because we have a very highly regulated and conservative banks and financial company sectors in Vietnam. So in total, we have 44 banks and 16 financial companies. You can see with this number, we have enough diversification in the business, but then also it's not there has been no new license being granted for new bank or new financial company in the last 10 years. So with the exception of foreign bank coming into Vietnam, the trend is that the banking industry in Vietnam will continue to consolidate without new players in the market. In Vietnam, there's also a trend for fintech where we see peer-to-peer lending company, online lending. We have discussion about a fintech sandbox, but these are regulation that remains in the discussion, and it will be in discussion for the next 1 to 3 years, right? Okay, so the next slide would be on the Kim An operating model. So we are a business lending platform that are backed by top banks and financial companies in Vietnam to support the business owners. So we have to take a look at both sides, the supply side and the demand side of our platform, right? So from the perspective of the banks and the financial companies, they think that MSME is a very lucrative segment. This is the backbone of the economics, and they want to support these segments. However, from their own experience, the banks realize that this is also a challenging segment, much more challenging than the consumer segment that they operate in because of high investment, high risk, and then a lack of segment know-how. And then from the business owner perspective, of course, they need access to business loan, cash loans for as a financial options for their business. But most of the time, they cannot understand or they cannot meet the bank's lending criteria. So this is where Kim An platform come into play to solve the pain point for both sides. So on our partnership with banks and financial companies, we operate on off-book models, whereas the licensed bank and financial company would provide a majority of funding for our portfolio. On the other hand, we will provide the product design, customer acquisition, proprietary scoring, and also the technology to connect. Right? So for banks, right, when a new banks want to come in and service these segments, right, if they want to do it alone, it will take them 3, 6, 9 months. So number 1, to set up the management team. Number 2, to build a product. Number 3, to figure out the IT infrastructure. Number 4, to build sales and customer acquisitions. So it's quite a long process, right? But if the banks decided to partner with Kim An within 1 month and with our open API and tech structure, we can connect directly into the bank core banking system, and within 1 month, the bank would start disbursing and have new customers that are MSME owners, right? So in that case, it becomes a win-win proposition between us and the formal financial sectors of Vietnam. That's the reason why that we are backed by many of the top banks and the financial companies. Right? Now, looking at the business owner perspective, because the bank would disperse directly into the business owner's bank account. So this is a chance for them to build the credit history with the formal sectors instead of relying on their informal sector before Kim An comes in. So for the business owners, Kim An is a very convenient service because we are fast, because we service them at their business location, and because everything is explained very clearly, and to provide them with option as to which banks or which financial companies would have the product that best suited with their needs. Okay. So moving on to the next slide. So at this slide, I want to share with you some of the insight because one of the big part of Kim An focus is that we start at the level where our customer is at, we want to understand them and collect data on them systematically in terms of millions of customers, and to build analytics to provide this customer with financial inclusion, and to build, most importantly, the business resilience for this business that even during the COVID time, right? So some of the demographic of our existing customers, more than 75% of them are women. The average age is 30 to 50 years old. Most of them have a minimum of 4 years of business experience. And the average turnover monthly is about more than 4,000 USD. Which, of course, this is a very large range from our micro business owner to find more established multi-location business owner. In terms of financial access, so before Kim An, these business owners mainly borrow from friends, family. They do social lender, relationship lenders, and then some of them through the black market lenders with very high rate. And the difficult things to understand here is that for these business owner, right, they can go out and they can apply for a credit card. If they need to buy a laptop or they need to buy a car, they might probably be able to get a loan to buy a laptop or a car. But when it's time for them, when they need the cash flow to push back into the business, Kim An would be the first or might be the only options that they can go through. On top of that, many of my customers have had bad experience with the bank loan that require the monthly repayment terms. And because of this, it has caused them negative credit history. So even though they have paid off the loans, they would not be able to take another loan from bank for another 2 or 3 years until their credit cleared up. Right? So working with these segments in the past 3 years with the banks and financial companies, we realized that more than a third of our customer would be qualified for the bank loan, their first bank loan via Kim An connections. Some of the customer behavior in this segment that we find very interesting, right? So for example, a lot of the business owner in Vietnam believe in taking loans as a way to build the financial discipline, and then also to build the relationship with the lenders, right? So I have seen cases where very big business start taking very small loans with Kim An that are in no way reflect the size and the scale of their business. And when we come to ask why is that, they say, okay, I might not need this amount right now, but it's important that I have this relationship with Kim An at this low season time, so that when it's high season time, I would have access to credit, right? And then some of the customers say that, okay, because Kim An break down the repayment term, have very flexible repayment term, not just monthly, but can be bi-monthly or bi-weekly or weekly, depending on the cash flow of the business. This helps them build the financial disciplines and to plan their cash flow better. So many of my customers also move from lending to saving using the exact same scheme that help them build the financial discipline. In many of the case, the real owner might not own the title of the business, which is such a critical requirement for the banks that are not in any way a real reflection of who is the owner of, especially a small family-owned business. And then also borrowing is not something that they actively share with their peer group, but only share it with some of their very close peers and fellow business owners. Right? So we get a lot of questions regarding, how our loan is used by these owners, and I share with you guys a few things that we have learned from these segments. So for these business owner, they cannot really separate between business and household expense, right? So their business is their primary source of income. So the loan that we provided are used for, especially the short-term, less than 3 months loans, are used for a variety of purpose that help to improve their life, right? So most importantly, we see a lot of tuition loans. So customer borrow to pay for the kids' tuition around September. we see a bit of home improvement or business improvement loans. So not like big fix up of the business, but more like gradual improvement. We see quite a bit of purchasing equipment to help them be a bit more digital, right? So to buy a camera, to monitor the business, to set up a payment system, etc. Right? And then I cannot stress enough that my customer strongly believe in financial options for their business, especially during hard time. And so they try to build relationship before the hard time comes with companies like Kim An, so that we become like a backup options and we increase the resilience of their business. So after we observe all of these insights and we do analytics on these data continuously, Kim An's goal is that we become a platform to serve the lifetime of business owner. So Kim An is very focused in that way. So if this is a business owner, we will take a lot of time to understand the demand, to analyze it, and to provide suitable products from many of our partners to better the lives of these entrepreneurs and business owners. However, if it's a segment that is not a business owner, that would be something that we work with our banks and financial company partners to support, but we would not support ourselves. So we are very focused in terms of who and how we want to service in our business model.
Thank you so much.
So on to the next one.
Go ahead. Go ahead.
Sorry?
Go ahead. Go ahead. I thought you.
Okay. So I'm very excited to share with you about our plan for scale looking forward. So Kim An is having the right structure, and we aim to become the largest fintech lender in Vietnam in this year, 2021. So at this point, we have covered about 2/3 of Vietnam. So 43 provinces with more than 80 point of sales or servicing center. So we will continue to expand our reach in Vietnam in order to convert our internal data of millions of Vietnam business into customer, and to provide this customer with access to the financial product from banks and financial companies. Right? Also, a large part of our acquisition strategy comes from the partnership with other startups in the same space. So we are partner of top e-commerce in Vietnam. We partner with the e-wallet. We partner with SaaS companies that are servicing these segments. I think this is a win-win proposition, because it also brings technology and know-how that to help strengthen the competitiveness of my customer. So for example, if the customer want to purchase, so they want to digitalize the business, they want to, what it means is that they want to bring in software that help them keep track of all of the income and expand on their daily business, right? They need to buy equipment, they need to buy software. Kim An would work with the SaaS company to finance this purchase, and then also to provide business with extra cash on top of that financing, right? So this is good for own size. The customer is less hesitant when they need to invest in bringing technology into their business. Our SaaS partner would have a better reach, and then also we would access the type of business that are very focused and also want to invest for growth. So we were able to achieve this scale. I think it comes from that we have quite sticky products and also a loyal customer base. Our net promoter score is north of 76. Normally, the customer would take an average of 5 loans with Kim An over the span of 2-3 years. So we have seen cases where customers take 20-30 loans from us as a regular part of their business activities. And in 2020, we continue to grow and strengthen our business even during the COVID time. We stay on the conservative side, where the demand really skyrocketed last year. But also that is the time that we find that our help is most needed within the customer base that we are serving. So going forward, and to serve and to prepare for this scale, we also look at the fundraising plan for this year. We would be focusing on the debt structure that provide us with the leverage to work with the bank and FI that are already our partners. Okay.
Thank you, Tracy and Xuyen, for your insights about Vietnam as well as the credit landscape in Vietnam. I would now like to introduce our next speaker, former Gopay CEO and founder of Mapan Rumah, Aldi. The session is going to be an interesting conversation between Aldi and Bo on their perspectives about impact investing through fintech services in Indonesia.
Great, thanks, Kamal. Yeah, it's my pleasure to introduce everyone to my good friend Aldi for a discussion that explores his career focused on financial inclusion and more specifically his experience building and maximizing the impact of Indonesia's first fintech company, Mapan, focused on livelihood improvement for low and middle income people, and then his experience building and growing Gopay while keeping impact at the core of everything that he does. Aldi started his career in inclusive financial services when he joined Kiva.org, which many of you may know as a leading peer-to-peer microfinance lending platform, as one of its first employees. After a few years leading Kiva's Southeast Asia microfinance selection strategy and also helping to build the tech platform that suffered a meltdown not once but twice when the company was featured on Oprah in the US, he moved on to BCG as a consultant focused on telco, financial services, and retail projects in Indonesia. And he's got some amazing stories of going around different emerging markets on the back of motorcycles with machine guns, trying to figure out how money gets transferred. And it was during his time at BCG that he came up with the idea for Mapan, which was then known as Rumah, and launched a pilot program with the support of Grameen Foundation before heading back to Harvard Business School for his MBA. So I met Aldi in 2010 and was really blown away by his vision, which was a shared vision that we had at Patamar in building tech platforms to help small shopkeepers make more money and provide basic products and services to the mass market of underserved low-income people. And he'd already developed the vision for Mapan, built an agent network of over 4,000 shopkeepers, and was in process of deciding between trying to raise more capital to take Mapan to scale, or take more of a traditional position at a private equity firm or large tech company. We offered to lead a Series A financing, and Aldi luckily decided, he said to me, "Bo, I can always go get a job at a PE firm, but I only have one chance to build Rumah." So he decided to move headlong into building Mapan at scale. Omidyar Network joined us in the round, and that officially kicked off a 5-year journey to lead him and the Mapan team to reach over 1.5 million families in Indonesia, and then negotiate an acquisition with Gojek in 2017, where Mapan would remain a standalone company in the Gojek universe, and Aldi and his financial services team would have a larger platform and more resources to do the work that was so important to them, really improving the livelihoods of low-income people and also providing financial services at scale. So while at Gopay, Aldi initially managed 3 different financial services companies and teams under the Gopay banner. He raised billions from investors such as PayPal and Facebook, and made 3 additional acquisitions and took the company from purely a domestic Indonesian business to a regional play. And I've got more stories from the early days of Mapan that we can possibly share here, but it's the vision and essence of Aldi and who he is that led the World Economic Forum to select him as a YGL, Endeavor to select him as an Entrepreneur of the Year, and Asia Business Week to select him as one of the top 100 people influencing business in Asia in 2020. So I'd like to welcome Aldi to this discussion and start off by asking him a question. As you've listened to what we've already discussed today, anything that you have as a first reflection?
Yeah, I mean, the first thing is like how far things have come. When I was listening to Tao's presentation earlier, I remember it brings me back to the days when I was traveling in Southeast Asia on a motorbike, looking for microfinance banks, and how something like what she's building is not even remotely available, and that's cool. And then after that, we went on to that first investment in Mapan. But I think the key is how important is it to get the right investor with the right perspective on impact and culture. Like when you came in with Patamar, that that time when we were still a small office with like one room and like less than 10 people. Remember that? It was like the rinky-dink building.
Yeah.
But that's when the impact culture and like the desire of figuring out what is the right theory of change is really built. And that's what's going to sustain the company in the future as we went on to kind of raise money from commercial investors, as you mentioned. I think because even beyond the C Ltd of the world and Golden Gate, when I was at Gopay, we had KKR, GIC, Warburg, and then eventually we moved on as we got bigger to like PayPal, Google, and Visa, and we met all these amazing people. And that foundation of having the right focus on impact and culture actually translated into real profits and enabled us to scale into tens of millions of users across the region. And I think it was just such a great journey that we've been through, and how different the sector has been. It's pretty amazing. 15 years in fintech, what a difference, right? So that's what I reflect on. Like I still remember that. And the topics that are being discussed in these panels were different 15 years ago when I was at Kiva as well. It's like so crazy.
Yeah, I mean, it's crazy to think about those days, like even thinking about the venture industry at the time, and there were hardly any venture investors. So not only were you raising money for an impact business, which oftentimes people think are, just giveaways and you're not serious about business, but there wasn't hardly any venture capital at the time. And for a lot of people who don't know this, we invested and led the Series A, and then essentially they moved into a big house. And think about this, Mapan was a big company, and there were 2 Gojek people sitting downstairs who were answering phone calls, and that was all of Gojek at the time. So, things change, right? Like to the point where then Gojek acquires Ruma or Mapan. So yeah, I mean, one of the questions I had is we really focus on financial inclusion here is, Indonesian fintech and financial inclusion looks very different today than it was 10 years ago. And maybe if you could just share a little bit about what you thought it felt like in 2010 and the battles you were fighting with trying to convince regulators and banks and everybody that they should get involved in this. And, you guys worked with like Gates Foundation, and Arjuna from Omidyar came over, and everybody was like really trying to convince the banking sector to do some things. What have been some of the biggest changes and regulatory changes maybe in the ecosystem that's really helped move the sector forward, and how entrepreneurs have been a part of that? So there's probably some people on this call who are, entrepreneurs or people investing in some more frontier markets and doing more philanthropy work there. What were some of the things that you learned during that process?
Yeah, so honestly, in the beginning, it was really difficult to explain what fintech is, because the word really wasn't as used. Right? Kiva, when I was there, was like an early fintech, but we never really used the word fintech that time, right? And because of that, there was no venture investor. And as somebody who came from a civil servant family, I don't have the connections to the businessmen to get the funding. So it was just really difficult to raise money. And because I wasn't able to raise money and there was no venture around, we weren't also able, there was no venture kind of gatherings where you can invite regulators to then talk about what happens in other markets, right? Like, who is this 26-year-old kid at the time who inviting some banker or some government regulator to talk about what happens in the US with like peer-to-peer lending? Like, that influence was not available to somebody like myself, right? And I think what's happened over the years is that as we eventually managed to find investors that were willing to make a bet on these, frontier ideas, like in this case, it was fintech for the base of the pyramid, like yourself, Omidyar Network, and some angels in Indonesia that ended up becoming Open Space Ventures, one of the biggest ventures in Southeast Asia. We proved that novel idea of actually building a profitable business by giving access to financial services to people who just didn't have it worked, right? There was enough margin to be made. And so what happened was then the regulators started to pay attention, because then because of the influence from the industry, from VCs coming in, and from pressures and public, kind of articles from abroad. It really made a big difference in terms of like how we we were able to influence the regulator. So I think most recently, right, that the regulator itself is actually now driving a lot of the changes. They're creating policies on how to create open APIs for banking. They're issuing P2P regulations. They're doing crowdfunding regulations and so forth. So I feel like it's really changed a lot since back then. And now there's probably more VC funding than there are entrepreneurs available to make that change in the ecosystem.
Yeah, maybe you could share a little bit about that. I mean, what do you think are some of the maybe misconceptions or some of the mistakes that a lot of people think, either as investors or as entrepreneurs, when they're starting financial inclusion companies, where they oversimplify things or they're potentially focused on the wrong things or not? You know, you and I have talked about this quite a bit in the past, but you know, where do you think like some of those key areas that people really need to focus on when they think about building a financial inclusion company and really building the foundations to move to scale?
Well, I think there's two things, right? When I don't think that inclusion is the end goal, right? Ultimately, actually, financial service is not the end goal, right? So the end goal is how do you get the family that we're helping to be better off? So let me give you an example. Like in Mapan, right? You know, we had these Rosca rotating savings groups where women's were taking turns to buy goods, and then every month somebody would pull their name out of the pot, and that person could buy their pot, the rice cooker, and so forth without having to pay any interest because they're effectively lending to each other as a group. Now, we could have gone a direction of really just making money by issuing credit at really high prices because we had the credit data, and we would become an effective, like, high interest lender for those communities. But we actually decided that we were going to do it differently and focus on the long term by helping them manage their money, because as they can manage more money as a household, they can then buy more things. And then when we give them a loan, they're much more responsible. So it was a longer path, but it worked. And that's actually how we got connected to Gojek, because there's only so much money that you can manage in a small and low income household, right? So I met this lady who said that, hey, I really need to earn money because I just lost my husband. And my buddy, Nadim, was the founder of Gojek. So I asked him, hey, can you help this lady become a part of Gojek? So at the time it was really small, so she could earn money. And a month later, she was earning $300 a month from before almost earning nothing. And that combination of being able to earn income and manage their money was really powerful. So it's not just about including them in the financial access of loans or savings. It's also, how do you think of them as a human being, as a family, and what is the end goal for that money? Like for this lady, Miss Apia, her goal was so that her daughter can go to college. It was a very clear goal. And I knew that if we helped her get that job as a Gojek driver, she could save enough to get there, right? And that is, I think, what sometimes even I forget when I was working on financial inclusion, that if you give them that access, they'll do something about it. But we always have to remember what is the end goal of that mother. And I mean, that was actually ended up the reason why we ended up joining Gojek, because we did a pilot project with this concept in mind, where the husband was a Gojek driver and the wife was a Arisan leader. And it worked, right? And then that's how I became to lead Gopay. So focusing on the end goal of what can help that family is really, really important. It's not about the financial product. It's about what dream they want to achieve.
Yeah, I mean, I think it's interesting, right? Like you bring this up, right? And a lot of people probably don't know this story, that you and Nadim were back at Harvard Business School at the same time. Both of you were thinking about business models that you could launch to actually help low-income people. Everybody thinks about Gojek as this, it's just the biggest tech company, and obviously not everybody who works at Gojek, shared that same vision, right? Because essentially the business got enormous. But going back to the very beginning, you two guys were beating up ideas and kind of coming up with models. Yours was, how do I help small shopkeepers and people in rural areas get access to the products and services that they need, make more money? And Nadim's real approach was like, how do I make these small motorcycle taxi drivers, help them with more money? And I remember those early conversations. It was just trying to get them more rides through literally a phone dispatch service, and then trying to move them over to package delivery. Like, I remember those early days. And so it's interesting to hear that, that's how you got comfortable. Obviously your personal relationship with Nadim, the culture that you'd built at Mapan, and also what he was trying to do at Gojek. And, can you share maybe just a little bit more why you've talked a little bit about what's driven you, but how did your culture, building an impact culture at Mapan from the beginning, really affect how you built the business, brought on great team members, and really took you to the point where you could attract top quality investors to believe in your vision?
Yeah, definitely. So I think because in Mapan, we've always focused on the word Mapan, which is how do you get these low income families to be self-sufficient? We managed to create a culture where all of the employees were really grassroots in how they worked. Like, they would go to the field. Even the engineers and product managers would go to the field and actually understand what are the actual problems that they had. And so this actually translated not into the product that we developed at Mapan, but also into the product that we developed at Gopay. So when we moved into Gopay, right, we also had to decide what to focus on, right? So, and how do we make the most impact? And what Gopay did was we were building the plumbing for these low-income entrepreneurs, the SMEs, that Tao is trying to target. How do you get them to be digitized such that you can get the credit history and disburse loans and give them access to savings and so forth that weren't available before? And so by building that infrastructure, we also had trade-offs to make. Like, for example, when we give a loan, do we let the customers, in this case, like a credit card type loan, roll over their balance so they can increase their access, but also then get into a debt trap or actually get charged late fees? So we decided against it. And by not doing that, it actually really helped us actually sustain ourselves in the time of COVID, when a lot of our competitors and other companies were defaulting in their debt. It helped us really maintain a portfolio quality for our lending, for example. So it really translates across not only Mapan, but also the companies that later on we grew and ended up actually impacting our cash flow and our profit statement and our NPL. So there is really a tie between the culture of impact and profitability.
Great. Thanks, Aldi. I think what we're going to do now is turn it over to Kamal to really run some questions. I know that I've got 1,000 other questions for you that I would ask, but I'm pretty sure the audience has probably got a ton as well that they want to ask.
Yeah, there's a lot coming through. Thank you, Aldi and Bo, for sharing those really deeply impactful stories. The audience is clearly chomping at the bit to participate in a conversation with all of you. But before we get started in the Q&A, we have a quick poll for you to fill out, and you can close the window once you've submitted the answers. So turning over to the questions that are coming through the chat. I know Bo has answered a few of them already. So if we start with Bo, I mean, this is really with COVID and the backdrop, a lot of impact funds reported that their portfolio companies were really deeply impacted. How did Patamar weather that pandemic? And what happened with your companies to deal with the pandemic? Also, I think there's a second question to that. I mean, how did your LPs react to COVID, and what support did you get from them?
Yeah, I mean, thanks for the question. I mean, COVID was obviously difficult for everyone. Some of our portfolio companies actually did really well. They, with trends around digitization, we have a company called M-Clinica, which just is working with small pharmacies all across Southeast Asia, and they saw their volumes increase dramatically because they were the only people who were able to make sure that high quality pharmaceuticals were making it to small and mom and pop pharmacies when lockdowns happened and you couldn't send around people with pen and paper to essentially figure out what the pharmacists needed. So certain companies did really well. Other companies that weren't doing so well related to certain sectors struggled. We worked really heavily with our portfolio companies, and luckily most of them were able to weather the storm quite well. Canara Capital, which is our SME finance company, Hardik is actually on this call. They did a phenomenal job dealing with a really big set of challenges in India with the liquidity crunch that was there. So, these entrepreneurs are best in breed entrepreneurs who are trying to figure out how they make payroll and how they keep their businesses going and thriving during a difficult time. When it comes to our LPs, we've got a great set of LPs. We stayed in touch with them. We did some update calls. They reached out trying to figure out how they could help entrepreneurs with any mentoring. I think that LPs, especially on the impact side, just wanted to make sure that these companies could actually survive so that then they could thrive in the recovery. Yeah.
I can see one for you, Aldi. How have you ensured that data privacy is kept intact and there's ethical data ownership? And security is obviously a big issue in this part of the world. And also, when you sold your business to Gopay, how did you ensure that the impact was not compromised and the data was kept secure?
Yep. So I think on the privacy thing, obviously that is something that as a large financial and payment institution, we talk a lot about and we care about. Fortunately, there's actually quite a lot of regulations on that in Indonesia that actually protect consumers. So we invest a lot in actually what we call separating the frying pans. Think about like cooking, there's halal and non-halal, cook. So you separate the data, but you just make sure that you can, on an aggregated level, use it to do, machine learning and predict and create models to reduce the credit risk for the portfolio. So it's literally just by creating these like gardens of the data that, and you anonymize the data so that the customers are never ever compromised from a privacy perspective, right? With regards to maintaining the impact as you go into a big organization, I think going back to my earlier point, because we were able to build a culture that was so strong in just caring about impact, it was able to translate into when we went into Gojek. For example, right, in Mapan, when you join, automatically there was a trip that you had to go to the village and like live there for like a couple of weeks to really live with the mom that's in part of our network and understand how they live, right? Gojek did not have that for the drivers at the time when I joined. But as soon as we went in, my Mapan team was like, hey, can we create this? Like, can we actually do this program? So we ended up having like what we call a driver day. So they spend a life as the day of the driver and visit a driver's family and understand the driver not just as a person who got you from A to B or got your food from A to B, but as a father, right? As a brother, you know, as a son, as somebody who has a daily problem. So, and that made a huge difference in the way that Gojek and Gopay started building their products. So we started building products for drivers, whether it's a loan or like a savings account that enabled them to buy a house by getting a mortgage from a big bank, because we were able to enable them to deduct from their daily payment, for example. So a lot of innovation came from these immersion programs that was already there in Mapan. And I feel that's the core, right? That's why the early part of building the company is when you instill these values. And as you scale, it actually helps you create commercial value in the future as well.
Tracy, this one's for you. Obviously, this is a big issue on non-performing loans, and a couple of questions have come in with respect to that. Who bears the risk of that? Is it yourself or the financial institution? What options does Kiman have to collect these? And what is the clear regulation from the government in terms of setting interest rates and debt collection from non-banks?
Yes. Okay. So I think because of the models that Kiman bear the work on building the product, doing the customer acquisition, and also providing our scoring model that are 80% approved by the banks and the credit institutions. So the risk is normally shared by both sides in these partnerships, right? In terms of policy for the credit, the interest rate. So because we are working with this partner, so we would be charging at the same rate that the partner, so let's say the bank or the financial companies are charging the customer for their other products, right? So of course that would help to fall within the regulation in Vietnam. And then for the collection process, Kiman support the customer to the best of our ability to make sure that they can build good credit history and they can repay on time via our servicing branches. But the collection process, we also have to follow the regulation for banks and financial companies as well, right? So you can see the way the partnership is set up would determine many aspects in terms of regulations that follow on after the disbursement, specifically on the collection and then on the interest rate that we can charge the customer.
Thank you. Bo, over to you. I mean, a lot of people have interest in how do we turn the mainstream investors to look at impact investments and impact measurement. And that's obviously an issue for a lot of mainstream investors as well. How do we invite more of them to see the potential of impact investing?
Well, you know, it's a great question. I think there's a couple of things going on. One, you know, source of capital has to demand that. So, you know, LPs and investors in funds and in institutions need to require that. But in my opinion, it's also going to take highlighting examples of really successful companies that have done this and done this well, and really focus on impact and prove that it's actually, you know, makes sense not only from a business standpoint, not only from an impact standpoint, but also from a business standpoint, to really start moving capital just due to how capital is controlled and who the players are that control it at the current time. You know, luckily we have a great set of LPs who fundamentally care about both. They, you know, like small is beautiful, but scale is necessary. And so, you know, they believe in the idea that, hey, we can invest in companies serving the mass market. And, you know, in my opinion, like tech platforms are going to completely revolutionize Southeast Asia. Management teams like Aldi who have impact at the core, and then early stage investors. We know that tech companies are highly controlled and influenced by who that initial set of shareholders, including the management team, are. And it actually sets the culture for the long term. So if Aldi and his team, and we have some other entrepreneurs in our portfolio in the same way, are able to build great companies that succeed, and they're able to show that, hey, like we pursued these in parallel, and we weren't making economic trade-offs, but we could have been making timing-based trade-offs to just make sure the company could get to scale and have the platform it needed to reach more and more people. So, fundamentally, it's more examples, more data points. This is something we've always been focused on, is how do we have a demonstration effect in capital markets and with investors. And, talking with really sophisticated entrepreneurs like Aldi, who then ends up controlling one of the largest financial services companies in Southeast Asia, you can have this conversation with Aldi, and good luck trying to convince him that he took a wrong path, right? Like he will probably be able to tell you, because he knows fintech better than anybody else in the market, that they're just off base. Like he kept it at the core, and it's possible.
Now over to you, based on the fact that you know this market so well, Aldi. Where do you see the trends going? What are the new financial products in this? And also people have referred to this emerging agent network platforms. Do you see those growing? And also what's next on the cards for you?
Yeah, so I'll answer the first one. So the last 3 years have seen companies like Gopay, and other payment fintech providers build the foundation. So the transaction network for consumers through the QR codes, and for merchants using the payment gateways, both offline and online, have enabled now more companies to build on top of that, right? So for example, the product that Gopay built was the pay later product for the consumer that enabled them to take a loan for like buying a hamburger. Like that's the super nano loan. But there's also lending products that banks can now give to the merchant, right? Now, what you're going to see happening is more and more fintech building more customized product for each of these sectors. So you're already seeing some supply chain financing for merchants. But I do think that for the consumers, you're going to start finding fintechs that use the data from Gopay transactions, from Midtrans, which is our payment gateway transactions, to then create more sophisticated either lending product or even insurance products that are not there yet, right? So insurance, for example, is still relatively early. It's still untapped. You're going to start seeing a lot more mutual aid insurance, for example. You're going to start seeing more sophisticated asset management products like you've seen in China. I think the way that it evolved is going to be different in sequence from in China because of the cultures of the countries itself. But you're going to start seeing people move up the stack of complexity in financial services. Now, I think with regards to, I think you said that like agent networks, right? I think agent networks are an infrastructure, but not necessarily the end goal. I think you need them in the beginning, but in the end, they will probably be less relevant because eventually people will have smartphones and you can interact with them directly. So the key for the agent is how do you provide an efficient distribution channel for like the cash and production of products, so extension of bank branches. Now, as for myself right now, after having kind of been in 3 high growth fintech startups, Kiva, Mapwan, and then Gopay, I needed a little bit of a break, to be honest with you. But other than that, I realized that over the last 2 months, I've interacted with really, really smart budding entrepreneurs or sometimes founders who have raised Series A capital. And I'm learning that one of the ways that I can scale my impact is by helping mentor these entrepreneurs. And so I became a board member of eFisheries, which is like a company that has a robot that feeds fish based on whether they're hungry or not. I mean, it's crazy, right? But I'm doing a lot of these things, and I'm also trying to like spend time to just write a little bit more of my learning. In Indonesia, nobody uses like LinkedIn as much, so like I've started this Instagram feed that I'm gonna start writing stuff on. Like it's basically my first name, last name, and I'm gonna do that for a while I contemplate on building my next thing because I am a builder, so I'll probably build something else after this. But in the meantime, I'm really excited about like meeting a lot of these young entrepreneurs who have great ideas, and hopefully because I was just there earlier, I can help them kind of build something that's even bigger than what I ever did. So
clearly entrepreneurship is in your bloodstream. I'm going to take 30 seconds of wisdom from you, Tracy and Noshin, as well as Bo, because we've got no time left for further questions. So Tracy, over to you. Tracy, you're on mute. Can we go with you, Noshin, first?
Yeah, definitely. I'm just so incredibly inspired by just hearing from the other speakers on the panel. It's really incredible being here. And thank you again, Komal, for organizing this and the rest of the AVPN team. I wouldn't call these words of wisdom, but a lot of what Bo and Aldi and Tracy pointed to are just some of the really heartening trends in this sector. You see, I basically wrote a mini essay to answer one of the questions in the chat in terms of so much focus on resilience and client protection and gender lens investing. And I'm just really excited to see what investors and social entrepreneurs are up to in this sector.
Over to you, Tracy. Just your words of wisdom.
So I think that this section has bring together a lot of perspective that I learned from from the Southeast Asia lens and also from Audi's lens in the Indonesian market. There are strong interest in the Vietnam market at the moment because of the news that are coming out of Vietnam for how well we handle COVID and the economics in general. But I think it just means that there are, even the opportunity is great, but there's also a lot of work that needs to be done on Kim Ang, and also we hope that we would receive the support from the investor as well, so that we can bring the product, the service that we are having to our segments, and also to really create a scale in what we are doing, right?
Over to you, Bo, to talk about the support that you're going to continue to give to this sector.
Yeah, I mean, this is our core focus. This is why we do what we do. I think my parting words are, at Patamar, we really do believe that we can reimagine a different Southeast Asia. The way that companies are built, the way that economic gains can be shared. Aldi is a perfect example of that. They made sure that shopkeepers making more money was key to what they did, not only because it was the impact thing to do, but that's how they kept more agents in the network. And I think that more and more entrepreneurs who are seeking early stage investors who share that same mindset. And then as it moves up the capital stack, as more growth stage and private equity funds have an impact mandate as well, we can truly build companies, in my opinion, which are doing it differently than some of the mistakes that have been made in the West of widening income inequality through technology. We can truly descale and make it so smaller scale producers can compete with bigger ones. There's a certain economy of scale that just comes through access to tools and technologies. And I think that we don't need to do it in the same way that have been done in other markets, and they can still be incredibly profitable businesses. So I look forward to keeping in touch with everybody in this community, and keeping the conversation going. At Patamar, we're going to continue to use tools like Clubhouse, doing weekly chats now, if you're familiar with Clubhouse, around financial inclusion, digital health, education. So if you're interested in those conversations, please join us there. We'd love to answer more of those questions and get more involvement from a group of investors and entrepreneurial community that are really trying to do this in the region.
Thank you, everyone. Thank you for offering your insights and furthering the discussion about financial inclusion in Asia. If you need to get in touch with our speakers today, please feel free to reach out to them directly or email jenny.kim@avpn.asia and we can facilitate a connection. AVPN's next event is Exploring a New Normal, Deal Evaluation During Uncertainty, an interactive workshop hosted by AVPN and Village Capital. This session is going to explore discussion around uncertain times such as COVID through a discussion with experts, deal evaluation exercises, and discussion groups with experienced investors. So please do register using the link in the chat. Thank you to all our participants for your thoughtful questions and engagement. We also want to again go back and thank our panel of speakers. And if you have any further questions, please reach out to jenny.kim@avpn.asia. Thank you, everyone.